All right, Tesla shares, as you see, having a nice move today. This, of course, ahead of the first quarter results. And as our viewers well know, though, the stock has been a laggard during the course of the year, down over 40+%. Streets pointing to weak deliveries and fundamentals. Of course, Elon Musk's political activity and subsequent brand damage for the company has certainly been a focus as well. Joining us now, TPG Capital Senior Advisor and former Ford CEO Mark Fields. Mark also served as interim CEO of Hertz, and we're happily call him a CNBC contributor. Mark, I'm curious what you're going to be listening for on the conference call and looking at when you get the earnings today from Tesla.
Well, it's going to be, as always, an interesting earnings call. I think the things I'm going to be looking for is, first off, what are they going to say about sales volumes and demand going forward? Like to see an update on the autonomous driving and the robotaxi service and the economics around that and the timing. Of course, want to hear commentary around the tariffs and the impact that can have, at least in a range, on the business. Going to want to hear about this entry-level model, which we've seen in the news lately. It's either in or out or decontented models. I also think, that it's going to be a lot on people's minds is how much longer is Musk going to devote his time to the government and get his focus back on Tesla. And then finally, David, I think the other thing I'll be looking at is the automotive gross margin net of the regulatory credits that they sell, because that's an important metric. And if you think about those regulatory credits, last year out of their net income, they represented about 30% of their profits. And as these legacy automakers sell more and more EVs, that opportunity for Tesla is going to dwindle over time. So I think those are the things that at least I'll be looking at.
That's a great sort of playbook, I think, for a lot of investors. Listen, typically they spend a lot of time talking about not the automotive business, but Optimus or full self-driving, robo-taxis. I would expect no exception this time. I'm very curious, as I think you are, to hear what the impact may be from tariffs, because I've been hearing, despite the fact that they're seen as a domestic, or they are a domestic manufacturer, they still are relying on a lot of foreign parts. Do you have any estimates, in terms of what you kind of think, Mark, what an impact might be in terms of tariffs? Not just there, but we've talked to you in the past about the other automakers as well in the U.S.
Yeah, I mean, David, it's going to come down to what the tariffs actually are, right? Because they seem to change on a weekly basis, at least what's on the books right now. If you look at the total auto industry in the U.S., regardless of where they're assembled, whether in the U.S. or overseas, but if for those vehicles that are assembled here in the U.S., about 50% of the parts come from outside the U.S. I would assume for Tesla it's slightly less, but they still get a good portion. And that's going to depend on the tariff amount. Is it going to be based on the 25%? Is it going to be based on something less? I think the bottom line is at its highest level, listen, it's a net negative on profitability. And in Tesla's case, I think the irony, David, is, the stock is currently is priced as a growth stock, but it currently has no growth. And so I think people are looking at commentary on autonomy, commentary on tariffs, commentary on Optimus, so that they can maintain that confidence, if you will, to keep that stock price up.
Think we'll get any commentaries on used car prices? Because they have been falling dramatically, I believe, at least according to some metrics for Teslas. I don't know how that figures into the overall value proposition, but I'm curious to get your thoughts.
Well, they may comment on it. Listen, it's important for Tesla customers, right? Because when they buy a vehicle, they want to make sure 2-3 years down the road, when it comes time to sell it, that they're not underwater if they're taking out, financing on the vehicle, so to speak. But what we have seen in the used car market is we've seen residuals actually come up over the last month because the calculus there is, listen, as tariffs are put into vehicle prices on new car sales, that's pushing up demand for used cars. And I think you're starting to see that a bit with Teslas. But, over the last year, the residual values has really taken a hit based on both the pullback in consumer interest in EVs, but also for the price discounting and price cuts that Tesla has implemented.
Yeah, now we're checking the Car Guru's index every day, and you're right, Tesla is an outlier. I did want to ask you, Mark, every now and then we get a hot take on autonomy. Yesterday it was the B of A desk, and they write, autonomous driving is a solution looking for a problem, and grim unit economics is not a great backdrop for aggressive product or market expansion or blitz scaling. I wonder, is that a rare view still at this point?
Well, it's probably a rare view, but there's some truth to it, Carl. I mean, if you think about autonomous vehicles and the use cases, it's really in dense urban areas. So let's use the U.S. as an example. You know, there are so many kind of dense cities in the U.S. where this could be applicable. Outside of that, probably the use case is not very compelling. Secondly, when you look at the business case, whether it's Waymo or Tesla or anybody else, they haven't come out with what's the business case to, turn this into a profitable business over time, because the capital expenditures that you have to make into the vehicle itself and then all the computers and sensors that you need to put on it is quite expensive. So that really has to come down, combined with good revenue growth. And there's questions around how big the market for autonomous actually is outside of, major urban areas.